Thanks for joining me in today's tips or tricks, and maybe having coffee with me. I don't know when you're watching this video, but I do find your lack of caffeine disturbing. It's my son's guy. It's great. But without further ado, let's just jump right on in. If you're about to take out a conventional loan or FHA loan, or you already have one, do you really know what you're paying for inside that mortgage? Well, don't worry. It's completely normal if you don't. You're not alone. In fact, many buyers and, believe it or not, homeowners who already have loans are in that same boat. But not understanding this could end up costing you more than you realize long term. So you are shopping to buy a home, or you already own one, and your monthly mortgage payment is, well, let's say $2,000. Sounds simple, right? But what's actually inside that number? Well, here's a breakdown. Your mortgage payment is typically made up of 4 main components, commonly referred to as PITI, or pity the fool, right? And that's principal, interest, taxes, and insurance. Let's break those down just a little bit. Your principal, which is the portion that goes towards paying down your loan balance. I borrow $400, my principal is $400. That's part of that payment is going towards that. Another part is going towards your interest. This is the cost of borrowing the money from the lender. Now taxes, every property's got different taxes, but we all know what taxes are for. The government loves them. But in reality, taxes are collected and usually held in an escrow account and then paid for on your behalf. There's a little nugget to that too. We'll talk about that in a little bit. The last one is your insurance. Now this one is where it gets a little confusing for some. Your homeowners insurance, or AKA hazard insurance. Now hazard insurance, homeowners insurance, primarily protects you, the homeowner. It does not protect the lender directly, though the lenders will require some form of insurance to protect their financial interest. And typically they're going to require enough interest to rebuild the house from scratch. But the policy's main policyholder is you, the homeowner. We're going to talk about hazard insurance, homeowners insurance. Now let's talk about MI. And no, I'm not talking about Mission Impossible. If you're buying a home, a conventional loan, and putting down less than 20%, or an FHA loan, you'll have mortgage insurance added to your normal PITI payment. Now, there are 2 main types of mortgage insurance, and depending on your loan type is which one you'll choose. Your PMI, or your private mortgage insurance, which is tied to conventional loans. Or you have your MIP. That sounds like a Men in Black, or I don't know, something. It sounds good. Mortgage insurance premium. And that's tied to FHA loans, or Federal Housing Administration, government-backed type loans. Different names, different rules, but the same basic idea. Protect the lender if the buyer defaults. If you choose a conventional loan, you may pay PMI. And that depends on a couple things, and that's your mortgage insurance. How much will you pay? Well, that's based on your credit score and your down payment. The smaller the down payment and the lower the credit score, the higher PMI you're going to be paying. The larger down payment, hopefully closer to 20 or 20%, the lower the PMI. 20% above, you ain't going to have PMI. Yay. So plan your down payment carefully. It can save you a good chunk of change in the long haul. Now, I get this question asked a lot, and the rules have kind of changed for some of these plans over the years, but one asked me, how can the PMI be removed? Now remember, this is a private mortgage insurance, and this is where you can save money, and a lot of people don't even know this or forget about it. You know, you pay a mortgage for a couple of years, you kind of forget about these things sometimes. But once you reach 20% equity in your home, through payments made towards the principal or the value of the home increases, those 2 together, you can request removal by contacting your loan servicer. It doesn't just fall off typically at this point. But you may or may not at that point have to do an appraisal. Or long term, you get about 22% equity in the property, it will kind of automatically fall off. I would still check with your lender on that to make sure that happens. Now let's talk about the government-backed loan, the MIP, FHA loans. So FHA loans have MIP. You're going to have MIP no matter how much money you put down. And it's called the mortgage insurance premium. MIP is required no matter what your credit score is. It's not dependent upon your credit score at all. Your down payment determines how long it will be. So if you put more than 10% down, you're looking at 11 years before that PMI can come off. If you put less than 10%, as of 2013, I believe it was, they got rid of the ability to take that off. So you will have it for the life of the loan. The only way you're going to get that off if you put less than 10% down is by refinancing the loan. Okay, so I'm constantly vetting vendors and lenders and things of that nature. And I work with a few trusted lenders right now who can run your numbers. Even if you're working with another lender, they can give you a second opinion before you lock your loan or choose to refinance. Listen, your financial situation and credit may ultimately guide your choice of loan types and how much money you can put down, but at least knowing that's half the battle. Have an end game. They'll help you get there. I will tell you, a great lender, they're going to help you break down your actual payment into the 4 groups I talked about that make up the PITI, so you know exactly what to expect. How your down payment and credit impacts your PMI or MIP, if that's applicable, and whether or not a conventional or FHA loan is the smartest decision for you. Which one's going to work the best for your application. Hey, that's all we've got for today. Thank you so much for spending your time with us. If you have any questions at all, put them in the comments below or contact us. And once again, MIP, PMI, hazard insurance, loans in general have a lot more information to them. We just kind of touched on the surface. So if you need a lender, we can refer them to or talk to one of your local lenders. Anyways, a pleasure. We'll talk to you soon. Take care.